Hey, I'm Abe, and today we are going to continue in our discussion about mortgages, and more specifically, we're going to move in the direction of tips and tricks. How do you reduce your monthly payments? How do you reduce your interest rates above and beyond credit rating and all of the normal things that go into that discussion? Number one on that list is really just to talk to your lender and ask. Ask for a lower interest rate, ask how they can set you up to reduce your monthly payments, and literally, just by taking this simple action, your chosen lender may end up telling you how to go about doing it. And some of the things that they may mention or may bring up as options are some of the items that we're going to talk about here. Number two, one option that they may recommend is if you take your retirement savings or just your general investments and your savings accounts and move them to their bank, may allow them, and this is perhaps during the mortgage sort of the contracting process while you're going through it, is what that'll do is they will often then add a point or more than one full point, which is to reduce your overall interest rate, and then they will pay for that point themselves because they view the business and the amount of money that they would make just on being the custodian of your savings as far more valuable to them than the $5,000, $10,000, or whatever it is that's going to cost them to pay for the points, or effectively to pay for the points or the money that they're losing out by giving you a lower interest rate than otherwise would be available to you. We've talked about points in a previous video, so if you don't know what they are, they're discount points. Go check it out. It's in 2 or 3 videos back. It's worth looking up. Number 3, another option is if you choose to pay your mortgage bi-weekly instead of monthly, you'll effectively take a 30-year mortgage and reduce it down to about 26 years. How that works is you're paying the same amount that you would normally on an annual basis or on a monthly basis, although biweekly doesn't line up exactly with a monthly cadence. But the way it works is you're actually making payments earlier, right? So instead of interest accruing over 4 weeks or a month, the interest is only accruing over 2 weeks, and then you're making a payment. And the amount that you're paying down in that principal doesn't then earn interest for the remainder of that month, and so on and so forth. And so over time, it drastically reduces the amount of interest that you are paying on that loan over the course of 30 years. You can reduce the length and the sum total amount that you will be paying on that loan if you just sign up for biweekly as opposed to monthly payments. And most, if not all, lenders will offer this as an option. Fourth, and something that will have a similar effect, is it will require that you put a little bit more money into each mortgage payment than is the mandatory minimum. The example we've been using thus far is you've got a $100,000 house, an $80,000 loan at 4% interest, and that gives you a monthly mortgage payment on a 30-year fixed rate loan of $381. But if you just round up, if you decide instead of $381, I'm going to pay $400 every month, and then I'm just going to call it there, right? Literally just $19 more each month. And it's not a stretch to think that you may be able to come up with $19 more every month if you say cut coffee out or, smoke a box or pack less of cigarettes, that you can pretty quickly and easily come up with that level of savings. So just by adding $19 to this loan and going from $381 to $400 a month, instead of 30 years, you will have paid off your loan in around 27 and a half years. So you've knocked 2.5 years off and paid significantly less in the net total of what your loan would have otherwise cost you. And then lastly, after you've been paying your mortgage for a while, your principal will slowly and gradually decline. You can look it up online. You can see sort of a chart of how much of your monthly mortgage payments are going towards interest versus how much are going towards principal, and the two lines sort of cross as they go down. So you're paying more and more of your principal off over time, and less of your interest, of your payment is going to interest over time, just as a result of those fluctuations. And that's the way every loan is set up. So, but after a period of time, after you have paid down your principal by a given amount, and the lender that I was talking to gave me an amount of about 10%, that once I had reduced my principal by a minimum of 10%, that I could go to them and ask them to recast or I think another term for it is refactoring the mortgage. And what that does is it's not a refinance. It doesn't set up another 30-year window that starts then. It takes the remainder of the period of time that you have and it sort of recalculates the curves. In doing that, that will reduce your monthly rate while keeping you within the same loan, same lender, same everything else. But it also gives you an incentive to, if you have a little bit of extra money, pay off or pay down the principal of your mortgage to the point where you've reached that point or beyond. And then maybe after 5 or 10 years, you can go in, you can talk to your lender, and you can make that change. Ask them to recast it. Let them talk to you about what that means, what their limit is, and when they would be willing to do that. And then go on in and get that done. And like I said, that will reduce the amount that you have to pay on a monthly basis. It'll vary depending on how much you've paid down your principal, but these are a lot of great options to consider. The bank wouldn't tell you about this outright. It's not in any of the documentation that you need to sign as you set this up. This is the sort of thing that if you ask them, if you build a relationship with your mortgage broker or with the lender itself, or even if you have friends that do this sort of line of business, if you just ask for a lower rate, if you ask for lower monthly payments and ask your lender to walk you through the options and what you could do or what they could do to help you achieve that goal, they may offer you some of these options. They may have things that I've not heard of. So jump into the comments. Let me know what you have found in your conversations with your lender. And these are probably everything and anything that a lender would offer is likely something that many, if not all other lenders will offer as well. So post it in the comments, share with the rest of us, and we will all benefit from that. I've just posted 4 or 5 here. I hope these help. Hit the subscribe button if you've learned something today. Share me with your friends so that they too can increase their financial literacy and, at least over the last week and a half or 2, increase their ability to go through the mortgage process with their head up, knowing what's coming and what costs and troubles they may experience along the way. Thank you for being here, and I will catch you in the next video.